Hey guys, it's George David with George David Investing. In this video, we're going to be talking about Netflix stock and why I'm buying the dip, even though the company had lackluster earnings and had lackluster sub growth because the economy started opening up and that started percolating over to their business. Now, as always, we're also going to be talking about today's stock market news and some interesting developments that are going on the COVID front and some other factors that might start percolating pretty soon into the economy. So it's very important that we talk about those factors as well, especially in relation to Netflix's long-term potential after this nice dip opportunity. So let's go ahead and dive right in. All right, in this video, we're going to be talking about number one, Netflix stock analysis, and whether it makes sense to buy the dip and how that relates to the 2 to 3x potential return still on the table for Netflix going into the future. Number two, we're going to also talk about today's stock market news and some very interesting things that are happening in the market that relates back to potentially causing a trigger for either a correction or a stock market crash. So you don't want to miss that point. Number three, we're also going to be talking about, is it time to buy, sell, or wait in relation to Netflix's short-term and long-term investment plays? And number four, that all-important point that gives us a little bit of anxiety, triggers for a stock market crash. So let's go ahead and dive right in. So currently, Netflix does $25 billion a year in revenue. Now, the company, when you look out about 10 years with both international and domestic expansion opportunities, both in their current product offerings and additional product offerings coming up in the future that are going to be rolled out, is estimated to have a number of $60 billion a year in maximum revenue potential. This gives us a growth multiplier of 140%. Now, when you look at Netflix, and there's a lot of other nuance points I'm going to be covering just a little bit later in this video, so stay tuned to that. But as a long-term investment, Netflix is a good opportunity. Now, here's why, and here's why that is, especially in relation to this dip that's happening. Number one, Netflix has very consistent positive revenue growth. Now, there's a lot of ebbs and flows with that revenue growth. Some years we might see 20% and 30% revenue growth increases. Other years we might see 8 to 12%. Okay, but it's still consistently gone up. If you look back through the stock, I'm pretty sure the whole entire time Netflix has been positive quarter over quarter, year over year. So that's a very good sign of the company. And like I said, there's a lot of domestic, international expansion opportunities and other product offerings as well that Netflix can tap into. Now, with that in mind, Netflix is not the biggest revenue growing stock, and it's also not the most consistent revenue growing stock of those other ones. There's other companies that are all-in potentials that have even much higher revenue company growth multipliers as well. An example of that, something that I emphasize a lot, is Tesla. That's a one that has a lot of revenue growth, and it also has a lot of revenue growth potential. Okay, so another factor that's super important is that Netflix is a mass use stock. It's not only something that a lot of people use, but you also most likely use Netflix as well as a streaming device at your home. And the reason why that's important is that it helps hedge any kind of issue that a company might have. So if you're not investing in something you don't understand or you don't know, this is a company that is tangibly used by a lot of people, and that's further credence by you using it as well. Now, before we dive into some very important factors about Netflix's short-term plays and long-term plays, the potential for 2 to 3x returns on the stock, go ahead and smash that like button for me. It'll help grow the channel and also help provide more content to more people by boosting this video up in the algorithm. So go ahead and smash that like button just like you want to smash Netflix's slightly underperforming earnings. Now, if you haven't done so already, please consider subscribing to the channel. I always post a video, try to do it every single day, try to provide as much value as I can for good short and long-term investment plays. Now, going ahead, here's today's stock market news. And here's something I was talking about yesterday in my previous video that is finally creeping up, and this is COVID fears. The issue with COVID, the big news story today is we're in a market slide past couple days, and there's a little bit of fears that COVID is not really going away as we thought it would with the vaccines. Now, personally, the reason why I started touching upon this yesterday, and the reason why this is very important to understand, not just for understanding the direction of the stock market, but how Netflix fits into that equation, is that personally, I actually know from a friend of a friend, so down the line, kind of close to where I live, someone that was age 35 that got the variant of COVID that died from it and was completely healthy. So that's actually pretty terrifying. And as I touch upon this later, these are some issues that might start not only causing a possible correction in the economy, but also a stock market crash as well. And we're going to touch upon that in a little bit. But yeah, those COVID fears are very valid, and it's very concerning that we have a situation where the economy is not growing as fast as it is. There's a little bit of inflationary pressures. This all starts affecting spend and earning potentials. And if there's any kind of lockdown that happens out of that, we're going to talk about that in just a moment. That's a very tangible repercussion. Again, other news factors, just as I talked about previously, corporate tax rate increases. 28% is the goal. Consensus estimate is that number will only be slightly bumped up from 21 to 25%. And Russia's sanctions and Russia's retaliation to those sanctions as well. And those are very tangible things to look at. So before we touch into all of those very important points, where are we in the market right now? Well, if you're looking at Netflix right now, you want to wait for a long-term opportunity. We're not at that golden cross point that makes sense to get that right price point to get in, and make sure you also hedge the risk of possibly getting in too high at the top of the bubble. However, Netflix right now in the short term is a great opportunity to buy. Not only has it had a hit, and this hit was because the economy is opening up, people are moving away a little bit more so than usual from being indoors. There's a lot of pent-up demand to do outside activities through this perception of vaccination and safeness that is going out. That it did impact the amount of revenue growth, especially, don't forget, revenue growth got exacerbated by 2020, so it was much above their usual delta that they usually have, which that means is revenue growth skyrocketed way above what is normal. So now there is a return to normalcy, maybe a little bit of a dip, and that's why right now is a good time to buy Netflix, because the company is still growing. There's a lot of growth potential, and the company has a lot of opportunities to continue moving forward, and there's a lot of debt that they don't have that they can continue to finance the company into those other opportunities as well. They have a lot of net profits. Even though their net profit is very humble at 5 to 10%, there's a lot they can do with that to invest in new content and new product offerings. Now, moving ahead to some very important ones. Here we go. But first, again, this is why you don't buy a technical, you buy a technical dip, but you don't buy any just random dip. Again, if you buy at the top of the tech bubble, we're in a little bit of a bubble right now with overvaluations, especially in the tech sphere like Netflix. You don't want to buy a random dip and go for a long-term wait. When I say long-term, a year or over, and try to sell that too soon because of a reaction out of that. Always buy the golden cross. So if you're a long-term investor, wait on Netflix. If you're a short-term investor, buy, because there's some good 10, 15% upside in the near term with Netflix. Long term, you still have that 2 to 3x multiplier, but now is not the right time to buy. And I want to make sure I cover this next part, because this is the very important part I want to emphasize with Netflix and the economy, stock market as a whole. And this is triggers for a stock market crash. As always, triggers are either higher interest rates, which starts impacting spending because businesses can't take out loans for the same interest costs. Interest costs go up. That's another person's job that they can't hire to continue to stimulate the economy, cause more spending, and spiking oil prices, because that impacts all aspects of the economy, not only just business spending in terms of goods and services, inputs and product prices, but also transportation costs of those goods and how much people can spend discretionary in the economy because of spiking oil prices. And there's also the wild card trigger, and this is the big one. COVID fears. Right now, hopefully, we can keep things down where the variant is withheld, the vaccines are going up, there's more herd immunity going on. But there's a chance that the economic outlook is going to stay very consistent, very, blah in terms of that 6% unemployment level, which is not a good unemployment level to have. That's definitely not full capacity in the economy, and especially in terms of spending. So, the pandemic lockdown is a very real possibility if there's this hybrid variant that's even vaccine resistant and not all of the population is inoculized to that. So with that in mind, the COVID fears is this. If there was a slowdown in economic growth because of COVID fears, but it's just a slowdown, this will be a stock market correction, which I mean by like a 10-15% dip. That dip will be a good time to buy Netflix. It's not there now, but a slowdown in economic growth, we're talking about unemployment basically being at 6%, just flatlining there. That impacts spending. Guidance gets affected because guidance is pricing in an economic recovery. That's tangible. That's going to affect those economic growth metrics, and that translates down to earnings for companies. But if there's a lockdown, that's going to cause a stock market crash again, because you're going to need another wave of stimulus. The market's going to wait for that next level of stimulus. And locking down tangibly affects business spending and consumer spending as well. And this is also going to cause layoffs. And that basically is going to cause a stock market crash. And there's a very real possibility of that. We got to be a little bit defensive here. Again, Russia sanctions. We don't do much business with Russia. Russia doesn't do much business with us. But if they cut back oil supply out of retaliation, well, that's going to tangibly affect the total amount of spending other countries can do that we do a lot of business, especially our large companies like a Netflix and like an Apple or a Google does with international countries as well. Once their input prices of goods and services goes up and it costs more for them to spend on oil, that's another person's spending in terms of the economy. That will impact earnings, that will cause a correction, and if it's really bad, it can actually trigger a stock market crash with that. So another factor there we're watching closely, corporate tax rate increases. Since it's only a little bit of an increase that most likely will happen, that's another factor that's going to trigger a correction. So with that all in mind, right now, if you're in Netflix, buy the dip. It's a good time to buy, but in terms of long-term opportunities, there's a lot of pressures right here that might trigger a stock market correction, let alone a stock market crash. We're definitely going to have a correction. It's going to be coming. Which one is it going to be? Probably it's going to be COVID fears first, but corporate tax rates, whenever those increase, those will also trigger a little bit of a correction as well. But if things get a little bit worse, and those two factors are COVID fears and Russia sanctions, then we might be due for another stock market crash. No indication yet of that, but we definitely have to watch that COVID fears closely. And so that wraps up Netflix. I'll have another video out tomorrow, so stay tuned to that. All right, guys, until next time, keep it easy.